I know you're watching Proactive. Joining me is Incanthera Chairman Tim McCarthy. Tim, always good to speak to you. And you're out with more positive news from the company. You've launched another large production order for your Skin Plus cell for Mariano, and that's on top of the previous order that was doubled and doubled again. Tell us more about the new order.
Well, firstly, hello again, Stephen, and thank you for the introduction. Yes, this news just keeps coming through, doesn't it? And we're delighted, of course. So this is a result of us continuing to work with Marino and preparing for our launch in September, a skin and cell range of luxury skincare products. And the announcement we put out last week was that we had confirmed a production order for 250,000 units. And that's following on, as you just said, from orders which we announced earlier in the year, which have doubled and then doubled again because they started at 25,000 and climbed up to 100,000. And that in total clearly is, if you can do your maths, is 350,000 units, which is a lot of units. That's certainly for us as a small company to produce. But more importantly, what that translates to in the launch in September, in the revenues that generates the company and ongoing profits. Yeah, so we're delighted.
Of course, Marino, whose parent company is Watson, is also targeting Asian markets for Skin Plus cells. So will this extended order help to meet some of that demand?
Well, the initial launch is in Europe in September, and that will be in Switzerland and Austria initially, approximately 30 stores in each, and these will be their high-profile stores for obvious reasons. And then we will work with Marino to make sure the inventory is there for them to pull out, or pull from us, I should say, to ensure that those stores are replenished as and when they sell the products. And then we will roll out, in conjunction with Marino, more stores in the European network as we build inventory, and they obviously want to roll out. And they continue to be very, very keen, very positive about all this. So it is almost a matter of, how much inventory can we supply them, and they will stick it on the shelves and sell it. In parallel to that, there's obviously the Asian market, which in the bigger scheme of things is the big market. I mean, Europe is enormous in its own right, especially for a company like ourselves. But the launch into Asia at some point is going to be very important for us. And also, I should say, very important for Watsons as well. And Watsons are very keen for us to progress that as quickly as we can. So I think we've alluded to in our previous releases that there are conversations going on with Watsons that in the bigger group, I should say, for Asia and other territories. So yes, that's active in the background. Quite where the inventory gets allocated as we produce it into Europe or Asia is in a sense, even a bit of a moot point. But the objective for us is to gear up that inventory as quickly as we can, and then we can supply it into the wider group, whether it goes into Europe or to Asia.
Does this put you firmly on track for the £10 million in revenue you were targeting for this year, Tim?
Well, that's an interesting one because we've just had a note produced by Stanford Capital, a second research note, which follows on from the note. And I think the numbers you're quoting are probably coming from that first note, which was March. And those revenue projections just been updated and upgraded, I should say, by Stanford Capital. And before this last note came out, whenever anybody asked me that question, I would say we will certainly meet the 10 million revenue target for this year. And when I say this year, that's our financial year. So that ends in March 25. And I would expect that we would exceed it. But whenever I was asked the question, well, can you put a number on what that means to exceed it? I wasn't drawn to do that. There's a little bit more clarity, a little bit more forecasting, if you like, that's been done by Stanford in the note that's just been released. And that we see an upgrade from just over 10 million up to almost 12 million. So almost a 20% upgrade in revenues, which is fantastic. And that is very much the analysts there working out what we have confirmed to date in terms of the production orders, which is 350,000 units, and then extrapolating that out expected revenue per unit. And that's how the number of just under 12 million has been calculated. And then what he's done in this second note is put a little bit more detail on how that translates into margin and EBITDA. which I think is very useful for investors generally, and obviously our shareholders in particular. And there's a lot of detail in the second note, which I think, as I say, would be very useful. And in this current financial year, the financial year 25, so we've got just under 12 million revenue. It drops down to just over 3 million EBITDA. Now, that's a pretty good result in our first year of revenue generation, immediately profitable. Just to remind everybody, we still continue to run a very, very lean operating model. There's very few number of staff. We outsource everything. For example, the production of all the skin and cell products is being done externally with our manufacturer, Freecare. So that gives us enormous leverage in that as we increase the revenue going forward this year and next year, that we continue to maintain the gross margins, but those gross margins then drop straight to the bottom line. And you see in the projections in the note that came out that you get an increasing EBITDA percentage on the bottom line, because essentially once you've got past the first year, we've already met our underlying overheads, how we run the company day to day, and that is very small. So as the revenues gear up, the EBITDA percentage increases, and obviously the absolute EBITDA increases as well. So the model and the way that it's presented in the business, our business model, I should say, and how it's presented in the research note is very stark. It's very in a good way, and I think that's what investors are seeing. That's what certainly shareholders that are coming into the company are seeing, that this is very much going to gear itself up for the next 2 or 3 years. And some of the projections in the note, if you just look at the top line, I mean, there's tremendous growth just in the next 3 years. So, and that is driving, I think, the sentiment, the positive sentiment. It's driving the share price, which has, had a good run recently. And the other thing which came out in that note for the very first time was a share price projection. Target price is probably the best way to put it. And he's done a comparative valuation model against the companies, similar companies in the sector, in this sort of cosmetic sector. And based on next year's earnings, he's putting a target price on of £2. So for any of your listeners and viewers that are immediately familiar with our share price, we're currently trading around 30p, 32p, and his current target price is £2. So that helps to put things in perspective, I think, to say there's a long way for this to go, and it's all based on everything that everyone knows and we've talked about before.
And of course, he also does point out that you have a highly scalable business model. So with 16,500 stores across Europe and Asia, I suppose as you generate this very strong cash flow, you'll be able to produce more inventory to supply those stores in the future, Tim.
Yes, and that you've hit on a key sort of financial strategy that we have, because we're keen not to be using more equity monies and diluting shareholders. We've alluded before to maybe bringing in some external trade finance, which would be non-diluted, but help us to drive those inventory build. But the absolute core strategy is to bring recirculating revenue, as I call it. So as we're pulling in those revenues from each order that we deliver through to the group, we are generating quite a lot of cash. And that cash then gets put straight back into inventory build, and you get a multiplier effect. It's as simple as that. So each time we recirculate that revenue, we get a multiple of extra units from what we produced before, and that is one of the core financing strategies to build the inventory growth, and then that turns into revenue. And the quicker that's sold, the quicker that we build that inventory, then that's how you push the revenue. So I'm very pleased with the projections that we've got in the Stamford note. I'm not going to sit here and say any more than I do clearly believe that we can achieve those. Let's see, we might be able to do a little bit better. Who knows?
Well, Tim, I hope you'll keep us posted on any progress as you head towards that launch in September. But thank you very much for the update today.
You're very welcome, Stephen. Good to see you again.
And you. That's Incanthera Chairman Tim McCarthy.